politics are probably going to boil in the same way that Brexit is boiling in sterling, but focusing in on the dollar, political risk, it's not in the price yet.
No, it's not in the price yet. That said, you know, I think it's quite interesting if you look at positioning in the US dollar, because what we see now is that dollar longs really have been pared back very significantly. In fact, if you look at the CFTC data on speculative...
Down, what, 80% from January last year?
Yes, but they're down to levels that they were last at in June 2014. Now, that to me is a very interesting period, because I would say that that period was when the ECB first went into negative interest rates, and that, I think, was really important in this whole currency war. We saw the ECB go negative. That caused knock-on effects in other European central banks, and that really pushed a lot of speculative inflow into the dollar. Now, that's been unwinding for about a year as the market sort of pushed back on this perception that the Fed could be hiking more aggressively. So the dollar's wound down, and I think that leaves the dollar less likely to go down, to be honest. Obviously, it's very data dependent. We've got the political risk, but with positions or long positions in the dollar, this pared down.
So do you tie up, this is our story, this is our big, on our top FX story this morning, and this is JP Morgan, which is that it's actually a bear, it's a bear trap. In other words, when you see this kind of demolition derby going on in the positioning back in, what, April of last year and September of last year, you see this spike.
So we've got bets on the strong dollar in blue, haven't we?
Yeah, so the strong dollar bets demolished back there, demolished there, and you see this reprieve. In other words, there's not a lot of shorts left in this market.
Precisely. And even though the Fed were dovish last week, they're still a central bank that is signalling they're in a hiking cycle. And so even though the Fed became more dovish perhaps this year, just about everybody else has also become more dovish. So on a relative basis, they're still the most hawkish G10 central bank out there.
And then we get some fairly hawkish comments coming from a dove at the Fed. Just to throw that into the mix. So the Fed Chicago President Charles Evans saying that 2 increases would be not at all unreasonable. Yes. And he is somebody who is seen as quite dovish normally.
Yes, precisely. And yesterday, of course, or the day before, we had 2 or 3 non-voting members, though, coming out with hawkish comments too. So it does seem as that the Fed do want to put down this prospect still that June is still on the table, and perhaps the market was perhaps a little bit too hasty.
June is then, not April.
Well, I mean, the comments that we had this week suggest April is on the table. I mean, that does seem really quite soon. We have, though, seen an uptick in inflation, and most inflation...
I mean, that's what we've got here. This is the PC,
yes,
which is the personal consumption expenditure. That's the chosen metric. My question to you is this. If that's rising, will Yellen lean towards running a hot, in other words, floating above that 2% level?
Well, she has indicated, perhaps, or reading between the lines, that maybe, you know, she's very concerned about the plight of the jobless American. Now, we've seen the improvement in the US jobless rate come right down. There are still concerns that there is perhaps more unseen slack in that labour market, because after all, wage growth still isn't pushing that significantly higher. So she, we think, might be more willing to see inflation go up rather than risk hiking too soon. And she also doesn't want the dollar to strengthen too far either.